Phillip Securities. So today I will be going through a lot on the US actually, maybe half on the US and then the other half on Europe itself. And why so is because US economy, news, trade policy is going to affect the other economies such as Europe, UK, Asian market as well. So the agenda for today, I'll be touching half on the US, maybe the early half, and then I'll be going through about Moody's credit rating downgrade as well. I'll talk about the yield curve, show you guys how yield curve will affect the future, the navigation of the investment, followed by gold chart, and then I'll talk about Europe, their economy, the different industries that investors are looking at right now. So let's start now. Let's go through on how US was fighting the whole world. So on April 2, if you look at this chart that I actually done, there was the Liberation Day. Even Singapore is affected. There was the announcement of the 10% tariff. I believe everyone knows. It shocked the whole world. And then subsequently, April 9, tariff paused for 90 days. That's when all the whole market shot up. So there's this meme cycle going on. It's Trump face, and then he implements tariff, the market goes down. He pull back the tariff, the market goes up. So currently, right now, I think there is the European Union tariff, and then now is the break time. So today, if you're looking at the futures right now, US market is actually up. Yeah, so the next cycle, what we are looking at next is actually Trump implementing tariffs. So that's the next cycle, but we'll see how it goes, which I'll actually touch on later on the trade policy that Trump is going through. So on the third part, on May, tariff had trade war with US and China. This is actually quite serious. You actually see the tariff itself going up over 100%. And it's quite crazy, to be honest. And then subsequently, even on May 13, when US inflation report came out, the inflation fell. And then it's actually reaching the Fed target rate of below 2%. But it's still going to take some time. It's still going to take a while. It's definitely not so fast moving forward. And then May 16, just 2 weeks ago, there was a Moody downgrade of the US credit rating. And why this is important, and I'm gonna show you why in the next few slides. So Moody's credit rating downgrade, and why is it important? And like when it first came out, market didn't really react. If you were following the US market closely, basically with this credit rating downgrade, right? There will actually be higher yields expected of the US Treasury bond to actually compensate for the risk. We can see that the 30-year yield is going to reach 5 to 6% nearing the future. And what that means is that if you're buying Treasury bonds 30 years later, I think the yield is about 5% right now. It means that in future, if you want to get mortgage loan, it's going to be crazy. It's going to be so expensive. No one want to take up loan to buy a house next time, which will in turn lower the housing purchasing rate. But I'll leave it to the next slide. But on the third portion, you see increased interest payment on national debt. So for everyone right here, US is actually, has a lot of debt to repay. With the 30-year yield going up to 5 to 6%, this means that US has to pay more to Japan, pay more to UK, who's holding the US, the bonds as well. So lastly, there'll be higher borrowing costs worldwide. Definitely it will affect Singapore as well. So you'll see, I think similar to the current condition that we are in Singapore, you see a lot of interest rate going up, the bank's interest rate, so borrowing becomes much more difficult. And keep this in mind, this will actually change US future in terms of investment for investors. because it becomes very, very volatile. And people become very uncertain that is US going to maintain this growth, or is this Moody credit rating downgrade going to affect the stock market? And would it be like the past 20 years, 25 years that the market has rallied so far? So this is the US Treasury yield curve that I plotted out. This is the yield returns as of yesterday. I think yesterday market is closed as well, but as of yesterday, this is the data I got it out on this chart. And what you're seeing right here is that short term, we're looking at about the first short months, higher rates, Fed tightening policy coming in. So as expected, moving to the 2-year or 10-year, likely there will be a decrease in the interest rate because they're expecting inflation to actually go down. So you can see, on the midterm wise, that's where they already have their rate cut, and that's where the recession fears comes in, followed by the uptrend all the way to 30-year. So as of yesterday, it's already at 5%, which is actually relatively high. I think the last time we had 5% was in 2023, if I'm not wrong. So what a normal yield curve would look like is straight up, like a gradient up. You won't see this dip in the midterm. Usually it's way above. And that would mean that the economy is going actually very well. But of course, COVID came in, inflation came in, there was a need to increase interest rate. So what you're seeing right here is higher rates now, and then midterm wise, it'll cut all the way down, and slowly long-term wise, because of the downgrade, people, they are uncertain that US will be actually okay. In this sense, if we look at the yield chart at 5%, there is more risk. So this 5% actually catered for a lot of risk and uncertainty in the US economy right now. So I'm going to show you the gold chart right now. It's very interesting to keep track of gold. Why so is that if you notice, currently gold has went up way high and higher, but it has dropped all the way to about 3,000. I believe it's about 3,002 to 3,003 level currently. And then there was a hike in gold prices. So there was a lot of interest, a lot of people buying gold in about April to May period. And this shows you a lot on the investors' investment style. And why is that so? Is that a lot of people are uncertain in US stock market, such that they believe gold is a better safe haven. And that's why you see a lot of people buying gold. I believe China is one of the bigger player, and then they sold a lot of this US treasury and converting them into pumping all this money into gold. And that's where you see gold prices shooting up, all-time high at about 3,005. Yeah, so let me see next chart. Yes, so this chart, I actually plotted out the S&P, basically the US stock market versus the gold chart. And you can see that the market drops followed by a increase in gold prices. So a lot of people are changing their investment style, moving their money to safer assets, such as gold itself. Silver, I believe the prices of silver has went up quite high. Even for Europe, which I'm going to show you in the next few slides, Europe stock market actually went up a lot, especially Germany. So this is just for you guys to absorb in on the money movement from US out into the world, into commodities, into stock market, other stock market. So what happened in Europe? What, after the tariff and everything, what happened and why is Europe gaining traction? So on the May, all these are very recent news. I try to get it out for you guys to keep you guys updated. So on May 7 itself, you see the French and Germany join force. This is in in concern of the US-Ukraine war, and that they are so near to this border, therefore they need these joint forces. And what this news actually meant is that the weapon, or rather the defense industry is gaining a lot of investment and popularity, because they see that there will be a need for more arms to be coming out. And then on May 8th, Germany has trade surplus of 21.1 billion. This is important, and this is going to show you why a lot of investors flock to Germany and other European countries. On May 8th, we have the US-UK trade deal. This is, I believe, when UK actually buy a lot of the treasury of US. So if you follow the treasury market of US closely, you actually see a lot of China's holding of the US debt move to UK itself. So UK is holding a large portion of the US debt. Then follow up on May 19th, we have the UK-EU trade deal. In concern of the US tariff, you see a lot of European countries working together, France, Germany. Then next up, we have the UK-Europe trade deal. So they want to secure themselves. They don't want to put themselves at risk, because everyone thought US was supposed to be the big brother. Everyone expected US to safeguard them, but not with Trump around, obviously. Trump came in and then implemented tariff, which was actually very concerning, destroying the balance of the trading within the whole world. So on May 23rd itself, which is actually just 4 days ago, last Friday, Trump came up with 50% tariff on EU. And the start date is 1st June, which was quite insane, to be honest, because it didn't give EU a lot of time to react or think about defensive ways to negotiate with the US. And then I think just yesterday, if you guys still follow the news, Trump retracted the tariff. It says, okay, we're going to have a pause. We're going to pause now, and then we're going to talk again in 9th of July or June. Yeah. So it gives you a lot of uncertainty with so many things happening around US. And if you look back of what I mentioned earlier, where the EU was supposed to be relatively more stable, and then US just comes in and said, no, you guys are eating a lot of the US money, and this is unfair to US. And then they slapped this 50% tariff, giving US no room to breathe. And that's where I believe US stock crashed as well for last Friday. So I think Thursday and Friday, market was very red because there was a lot of uncertainty. People say, hey, US is doing all this, so move the money out. So you see gold price go up because safe haven once again. Gold price went up last Friday. And then when Trump actually put a pause to this tariff just yesterday, you see the market coming in green today because everyone like, hey, maybe it's not that bad. But of course, moving forward, this tariff is just a pause. It's nothing concrete yet, but of course, investors, sometimes they tap on this uncertainty because they believe that they know Trump will pause this tariff or just retract this tariff, 50% tariff. But that's for investors and I believe people who take the odds of going what they believe in the most. So I'm going to show you now is the S&P index. compared with the European Union. So for DAX 40, it's representing the German best, or rather top 40 companies, biggest cap. And then we have the followed by UKX. UKX is the FTSE 100, which is UK's biggest 100 biggest cap. So it's similar to S&P. S&P, I believe, SPY is S&P 500. So it's the 500 in top biggest cap in US. Each individual European countries, they have their own index as well. So DAX 40 is the German one. UKX is FTSE 100, which is the UK top 100. And CAC 40 is the French top 40. So the number just represents basically the company, the number of companies, and each for different region. And if you look at this chart, why I brought it out here is that this is the year-to-date return, meaning it's the start since 2025. We're looking at SPX since the start after December. It's been how long? Going to 6 months. It's been going to 6 months, and S&P, or rather SPX, is at negative 1.7% return. How is that possible? Is it like it's been half a year? Did the US not grow at all? And you see a lot of this money actually being moved out because it's been so volatile in the US. Money is moving to gold. Money is moving to Europe. So DAX, the German index, has grown 18% in just 6 months. It's going to be June now. So 18% in 6 months is a lot. And we see that UK hasn't been growing that much, and followed by the Euronext French is relatively on the positive end, still better than US, but not the best. But I'm going to show you why in the next few slides as well. It's more to do with their industry and why Germany is so high at the top right now. So I'm going to touch on Germany now. Germany performance index, which is similar to S&P once again. If you look at the breakdown of each different industry, I've actually put it up. So these are the companies that are biggest within the DAX performance. And you see that industries in the German economy has the biggest play, followed by financials, which is at 17.8%. And then moving down, we have information technology, followed by consumer discretionary. And these are going to change later when we go to the French market. And you're going to see why that they not grow so much. So these are the few biggest companies that you will see in German, very famous and very popular brands. Lions, which almost took over NTUC, but was rejected. Deutsche Bank, Deutsche Börse, and SAP, which you guys too familiar with this. I think a lot of Singapore system is also using Singapore country. And then followed by consumer discretionary, which is more towards the consumer spending portion. And we have a lot of automotive companies such as BM, Porsche, even sportswear such as Adidas. And this is the portion that actually didn't do well with this tariff implementation. Why is that so? Because when tariff came in, people were uncertain about how things would work. Then US wanted a lot of companies to return back to the US instead of being out in the Asian markets. And this would eventually increase costs for the companies. And if you read the recent news of the Apple, they moved out of China to India, and then subsequently they were implemented, Trump wanted to implement tariffs on Apple when they moved their production to India. Trump was like, why not move it to US? Why do you still want to be outside? So Trump wants a lot of this company to actually go back to the US, which will eventually increase costs for the companies. which is not very ideal. Believe Apple price is going to rise in Singapore soon. So for those Apple users, good luck. Not sure if you still want to change to Android. But nevertheless, consumer discretion side, which is rather consumer spending industry, took a hit, especially in this tariff war. People became more reserved and they reduced their spending. And this is the portion why later I'll show you France, the economy, and why they are so heavily impacted. So if you're interested in the DAX performance index, or rather the German economy or German companies, these are some companies that you can look at. These are very stable blue chip companies that a lot of financial institute holds, and that is popular for their stability. I believe if you look at the industrial rain metal, the RHM, listed in Germany, they rose quite a bit in terms of their stock price because of the recent the recent joint force with France, and then there was a lot of spending increase in defense and technology, and that's why Germany index performed so well this year. So one sector to look at within the Europe side is definitely the defense sector because of the ongoing war everywhere. I think there is actually more war here and there. So defense company usually benefit from this. So if you're interested or you are wondering why Germany did so well, it's mainly because of their manufacturing sector. I think even Siemens SIE, right, did very well for their earnings. So you can do a quick check on their stocks. I believe they did very well. And that's why you see in this DAX performance, right, it actually rose so much because most of the sectors are actually heavily located in the industrial portion, which is about 21.8%. Last check was about 22nd of May. I tried to update as closely as possible. Next, we have the financial sector. Financial sector, I think similar to Singapore, is very stable. If you are interested in big, foreign financial institute, these are also some of the financial sector that you can look at. These are all available on Poems to trade because we are all for Poems, right? We're connected to so many different markets. And if you are interested to trade German, interested to trade French, we have it ready for trading on our platform. And then information tech, which is about 16.6, close to the financial, the market cap, but heavy portion is still on the industrial. And next, I'll show you the breakdown of the different companies right here. And look at RHM. There was 187.26%. I think this is I think I cropped off, but this is a year-to-date performance. Okay, and that's about twice. If you invested, you probably have twice, close to 200% profit already. But nevertheless, this is the past performance. Moving forward to the future, will this defense sector be something to look at? Yes, definitely. It will be something for you to diversify into, but rather not to all in your money. That's not diversification. That's just buying all out. You're thinking that this company will gonna shoot up. But do remember this webinar? I'm trying to show you guys the beauty of diversification. And if you diversify into Europe, you will actually benefit from the investment that people made in compared to the US. So if you had a portfolio of a mix of Europe and US, you wouldn't be down year to date. You probably benefit, you would have benefited from the percentage increase in the Europe sector. And if you look at the industrial breakdown, which I highlighted in red, you will see that consumer didn't do so well, which is expected of the trade war and a lot of uncertainty. If you look at US itself, they have a lot of job cut, but this is not happening only in US. It's worldwide because there's a lot of uncertainty, a lot of spending cuts. Borrowing became so expensive. Starting a company is so expensive. Why would I want to hire more? I would just cut the manpower. And that's where you see a lot of people scared to spend because they wouldn't know when their pay is coming in next, or will they be out of job. So they rather save. And that's where you see consumer spending reduce a lot. And that's when this automotive company, or rather consumer wear in Germany, going down. So because their earnings didn't improve, didn't grow, they went down, their stock lose money, and that's why you see this discrepancy. And then the financial sector, which is relatively stable in Singapore and even the other few economies, even in UK as well, which I didn't touch on in this webinar. Financial companies are relatively stable because of the high interest rate right now. But nevertheless, when we have to take note of the central banks cutting the interest, because that will actually the banks itself will not benefit from that, but they may grow in other investments such as insurance. So it's hard to say yet. But as of now, financial sector is still benefiting from the high interest rate environment. And that's why you see so many banks or financial industry doing so well now. So next, I'll move on to the European market. The French market economy. So CAC is for Euronext Paris. And why suddenly, why only German do so well? Then the French, why suddenly drop? It's still in a positive end, but it didn't do so well compared to German. And this is because of the consumer discretionary industry for the French market. If you look at the consumer discretionary side, you see a lot of luxury brands. They are famous for luxury brands. And with spending, like what I mentioned earlier, with spending cut, people trying to save money because they are uncertain or because there's so many job cuts, people wouldn't spend. So Stellantis so if you see, I think most of it are luxury brands, except for Stellantis right there, which is automotive as well. So people are cutting down on spending on new cars and new luxury goods. That's why you see, if you look at the prices of the stocks, which I'll show you later, they went down by a lot. And you need to remember, these are very, very big companies. These are like the top few, the top few biggest market cap in the French market. And subsequently, moving down, we have Airbus, Safran, Vinci, and Thales, which is the manufacturing portion of Euronext. And they did quite well. They have been relatively good, but not good enough to actually carry the burden of the consumer discretion. Then moving down, the third one is the financials, which is at 11.2%, which is, we are moving down lower and lower with, do take note in mind, the bigger sector is still the consumer discretion, which actually brought the CAC performance down by quite a bit. If not, they would actually be doing better, if not even or closer to the index. But it's because consumer discretion went down by so much. That's where the CAC performance index didn't actually improve. So this is the breakdown that I actually got out for you guys. I try to update it by the latest figures. And you see the downside, or rather most of the side that didn't do as much or rather perform well is the consumer industry. And I highlighted in red, if you guys can see on your right hand side, all the luxury brands, Although Airbus did quite well, I mean, exception, but you see Kering, LVMH, even Stellantis, which is one of the biggest automotive for France, is down 26.84%. So the consumer side got disrupted a lot. That's why you see the performance index didn't really perform well. But nevertheless, BNP, Safran, and then we have CS as well, more towards the financial and industry sector, still doing well. Then again, they couldn't carry the burden of the consumer side. So what this means is that currently the luxury goods are lower in terms of their stock price. Is it a good time to buy? Very hard to say. Once again, you have to see, you have to read, have to follow up with the news. If you are doing company specific investment, you got to read the news of how, or rather, what the economy is like right now. But because if you have the pattern of the current situation where high interest rate, people are uncertain, trying to move out of US, slower spending, you see a lot of consumer consumer side going down. So a lot of companies not making as much money as before. Stock prices drop relatively quite a lot as well. But that doesn't necessarily mean it's a bad thing. It's still it's still opportunity for investment. So do keep this in mind next time if you want to buy luxury goods for your wife or whoever, and then you don't want to buy the real products. This is at a discount right now. But do take note, French investment, there is a tax of 0.5%. It actually went up by 0.1% recently, I think just this year. So there's an additional tax on buy, so do take note on that for their stocks or even their products if you go to France. So I'm going to show you after this why or what you should be looking at. Instead of the specific industry or rather specific company investment, you can look at the different ETF and that I've actually listed out. I think there's many more, but these are the relatively bigger market cap ETF for you guys to go and look. To go and check it out. These are listed in the different market. So if you look at the first ticker, which is DAXEX, this is tracking the DAX 40, which is if you are investing, it's similar to S&P 500. You are just investing in the index itself. You don't really need to know about what's going on, but rather tapping on the overall industry. You are not targeting a specific sector. So this is how the German economy is doing, or rather the stock market, not really the economy. The stock market is doing. So AUM is about 8.92 billion, which is very, very big out of all this year. And then you see the year-to-date performance, that's 20.27%. That's very, very high. Okay, if you are comparing it. So the first two ETF that I've actually listed out for you is both tracking the DAX. So they are of similar holdings and similar characteristic. If you look at the top three holdings, these are all German companies. I mean, if you really want to invest in the specific company, you go ahead, please. There's no why not. But to take note, I would suggest that if you are investing in the individual company, you will have to keep track of what's happening in the Europe side, because it's all these are very sensitive to news. But if you want to be a long-term investor, you want to diversify your portfolio, do look at the index itself, because I rather you have a good sleep at night than to worry about your stocks not doing well. So Xtrackers, iShares, big companies, they do come up with ETF, and then there is expense ratio right there for you. These are mostly like annual management fee, which will be charged if you're holding the ETFs. And then the only difference is that these are two different companies managing the different ETF. So some may buy more, maybe 45 holdings, some may buy 44 just to balance it out or diversify. And then next we have Parasite, which is tracking the CAC 40, which is the French 40 biggest. The breakdown is there. 1 year performance not that great, but year to date relatively good, at 8.26%. All these once again updated just today. I want to try to get the latest figures for you because so many things happened recently, and then the prices move so fast, which is also why investors are worried because things happen too quickly and they do not have time to react. So why not invest or diversify into safer options such as gold, or rather in Europe side, which a lot I feel is underrated. So a lot of investors actually flock to all this European, and that's why you see US not growing as much. So if we look at the French and the FTSE 100, FTSE 100 once again is the UK side. They are relatively doing well at year to date 8.8% plus, which I showed you previously at the graph where I did a comparison of SPX return, which was at negative 0. something percent, probably in a positive with today's movement already lah. But nevertheless, a lot of interest is still in the Europe side for diversification. And if you look at the FTSE UCITS ETF, right, you'll see bigger holding up to 100 different companies. And of course, I listed out the different holdings, top holdings of the ETF. So if you're interested, you think, I know specific company will do well, you want to invest in the specific company, maybe you can check out top 3 holdings, but also do note that the economy is moving at a different consumer appetite. So if the consumer is not willing to spend, consumer side is definitely not going to earn, stock prices is going to be down because earning growth is not there. So it's mainly tracking, you got to know the news, what's going on. That's very important. Unless you just want to do simple diversification, take a look at the index performance. So what I'm trying to do here today, I'm not trying to get you to quit US trading. If you are involved in US investment, do still go ahead. I feel like US can still remain as one of the top investment spot because it is so popular. There's so many different counters and there's always news about them. But to not put all your eggs in one basket, always remember to diversify out into the different exchange there is in the market, because sometimes you may overlook or you may miss such good opportunities. And that's why Europe has gained traction so far. And yeah, and that's for the different ETF I have for you today. I have some questions. Yes, okay. I'll just answer a few questions. Are these ETF available on POEMS? Yes. So all these form that you see right here is ready, already up, ready for you to trade. So if you guys are interested in the ETF, do go onto our platform, take a look, do some research, maybe to see how their performance is for the last few years, few months, and then see if you're interested to make some investment. But once again, Europe is a crucial, important, and stable economy, or rather stock exchange for you to take a look into. Please do not, at this point where US is so volatile, please do not put your eggs in one basket. Do take a look at Singapore market as well. I think there is also a lot of opportunities there. It's more towards guiding you guys into a safe haven, safety safer asset instead of putting it into you sleep today, tomorrow your stock is down 20%, and we don't want that for investors. So diversify your option. I think that I also have a few things that would like to share. I think that happened recently. I think in the French market, inflation came down about 0.1%. The news was today, so I thought why not share with you guys. And then UK inflation, although I have asked you guys to diversify, do take note that UK inflation is also up in April. I think the news came out about 2 weeks ago. UK inflation went up to 3.6% from 2.6. What that means is that there's still spending, relatively high spending in the UK. So prices are not really going down. Likely they will have to maintain, if not hike, the interest rate. So you may take a look, if you are investing in the UK, do take a look at the financial sector. I think that's one sector that will benefit because London has one of the biggest financial hub compared to the whole of Europe. So something to take note is if you're looking at Frankfurt industry sectors, take a look at the defense. If you are in French market, you can consider consumer, but I think or I foresee that consumer is unlikely to do well in recent months. Likely will only do well in once interest rate cuts. When there's more borrowing around, people are willing to spend, you can move your asset holding, diversify it to consumer asset because at the current price are quite low, if not moving down to their 52-week, but I think there's still some time. Take a look. Then if you are investing in the UK, take a look at the banks. Banks, I believe UK has one of the better dividend side. So they do provide a lot of, I think banks, HSBC, I think there's still a lot of different banks in UK. So something for you guys to take note on the different sector and different diversification style that you want to do. But if you just want to have a good rest, you don't want to think too much, I would suggest if you invest in the index where it's pretty much diversified for you into the different sector, then you can just have a good rest instead of thinking how your stock would react. So without further ado, I think this is probably the last slide I have for you guys. For those, I'll just go through a bit. For those who do not have an account with us, do scan this QR code to open an account. If not, you can join our Telegram group, which we will be posting almost every day right here. Scan this to join our Telegram group, which I'll leave it here for a while. Do also take note tomorrow there is a webinar on the economy uncertainty, which is hosted by Jianhao. So amidst these US tariff talks, right? If you guys want to look at specific stocks that in the US, what are the investment opportunity? I think there's a webinar on it tomorrow, which is free as well. Do take your time. It's at night. You can find it under our Poems website. Just scroll down on the market and seminar portion. You can check it out. And then for those who are investing in the US, I think there's a lot of earnings tomorrow. We are looking at NVIDIA's earning at market close, Salesforce earnings at market close as well, and then HP, the computer HP incorporation tomorrow. So do me a favor, there is this survey form. Just scan, let us know what you are looking for in terms of investment. I will take my time to actually go through the survey form and then try to cater out very specific webinars for you guys, because that's what we want for you guys to actually take your time to attend this session. I believe Ying-Jie, one of my colleagues, will actually be doing a TA webinar for free as well, upcoming on just next week. So do take a look, catch him if you can, because he is one of our expert TA, and he gives a lot of insights to how the price movement or price action on the different or specific stock that maybe you need a second piece of opinion with. You can always tap on Ying-Jie's expertise. So once again, I'm reaching the end of the slide. If you guys have a question, do sound it out. I can go back to my slides, show you guys what you guys need to know or what you guys want to know. Do ask ahead. If not, I would appreciate your time for tonight. Thank you so much for coming. I hope you guys have took away something in terms of what I have mentioned earlier. Hope you guys actually, have, or rather have some vision of where you guys want to invest your money. Remember diversification, not just putting everything into one single asset. So with that, thank you so much, everyone. Thank you. It's close to 9 p.m. Happy trading the US. Stay safe and stay wealthy. So thank you, everyone, for the night. Hope you guys have a good rest.